All right, let's welcome our market guest. Mayuresh Joshi now joins in from Angel Broking. Mayuresh, hi, good morning. Is this the weakness that you would use to buy, or do you get a sense that the market could head lower and maybe even go back to the levels from where it started the bounce, somewhere around 80 to 50 or so?
Morning, Anuj. I think yes, it's a possibility, and probably looking at the expectations of market in terms of corporate earnings not coming through, and we've probably seen that in TCS's numbers, which they probably disappointed. Clearly, I think the markets might be probably headed lower. So I think in terms of entry points, I think there will be better levels probably for a lot of market participants to enter at lower levels. So I think the best policy probably right now is to probably gauge how the results on the private banking space probably will pan out. I think going by the trend that we've probably seen in TCS's numbers, I think the IT numbers expected to weak as probably the market was expecting. But again, I think the cross-currency headwinds probably are taking effect in terms of the cross-currency revenue growth. So clearly, I think the moment that we probably see in stocks, and again, I think the moment that we probably saw in stocks like IndusInd Bank, a lot was probably factored into. So private sector banks expected to post a strong set of numbers. Public sector banks, again, asset quality expected to remain weak. Volume growth concerns probably remain on the two-wheeler pack, and again on the FMCG pack, though the EBITDA margins will be probably better this time around because of the trickling effect of lower crude. So I think it's going to be a weak set of numbers. So I think better entry points. So I think wait and watch is the probably best way of approaching this market.
Okay, wait and watch then. Mayuresh, hi, morning. What do you do with TCS now? Because, you know, this stock has been one of the biggest wealth creators over the last many years. And the management in their own admission said that execution is on track. It's only certain macro issues that are dragging the company's fundamentals. Would you look at this as a buying opportunity for long-term investors?
Morning, Sonia. Clearly, again, as I was mentioning, probably I think wait for further declines onto the stock. And yes, I think in terms of the macro environment, as the management put forth, I think they were in challenging times. So clearly, I think the telecom vertical, the diligent vertical on the insurance side is facing issues, and probably that will take some time to resolve. And even on the energy side, with the fall in crude prices, probably I think the discretionary spend on that front will remain muted for the better part of FY16. Having said that, probably I think the management outlook in terms of discretionary spending overall, apart from these three sectors, look quite robust. But again, I think I would concur with Anuj. Probably I think the management was not that confident in their post-management meet that they probably sounded off. And again, I think that is probably looking at the kind of outlook in terms of business verticals that the management is looking at. However, I think any further declines on the stocks, yes, 7 or 8% decline from the current levels, I think would become a good buying opportunity for long-term investors. I think we remain quite optimistic probably on the IT story, and specifically on the top tier names. If you exclude this quarter, which is supposed to be a traditional weak quarter for IT companies, I think the cross-currency revenue growth over the next few quarters should stabilize. And again, I think the EBIT margins probably should start showing some amount of improved traction over the next couple of years. So I think if you're holding a view of around a year and a half, I think a significant decline on stocks like TCS, Infosys from the current levels can start looking at better opportunities. But I think wait for declines. I think there might be some further selling pressure coming onto these stocks.
Okay, Mayuresh, a word on Reliance ahead of numbers. It's seen about 13% rally this month. Clearly the leadership stock right now, but from here on?
So clearly, Anuj, I think we have been optimistic on Reliance, and again, I think it's a portfolio stock that one probably holds. So I think from a near-term perspective, the kind of capex that it's probably done, both on its core and the non-core side, has ensured that these ROEs probably are not expanding. Again, I think with the kind of fall in crude that we've probably seen, management commentary will be very keen to understand probably how they're probably looking at different business verticals, specifically on the shale gas side. And they've already indicated in the last quarter that they're curtailing some amount of capex, 30 to 40% on the shale gas side. Again, I think in terms of their core performance, I think the off-gas cracker plant will probably start getting commissioned by the end of FY16, beginning of FY17. So I think that will incrementally add to revenues of Reliance. But again, I think GRMs expected to be extremely strong, and I think a lot has been probably factored into the run-up that we've probably seen into the results. So if Reliance probably outperforms in terms of GRMs and in terms of their business outlook, probably I think the stock can head higher. But we remain extremely optimistic. So I think from a long-term portfolio call, Reliance probably should be there in your portfolio.
Are there any other stocks that you guys are recommending a buy into for the longer term, despite the volatility in the market?
So clearly, Sonia, I think apart from the large cap names, probably private banks, a select few IT stocks, as I mentioned. I think mid-cap cement is probably where we probably are betting our guns on. So JK Cement, JK Lakshmi Cement would see some amount of margin expansion happening in the next few quarters. And again, I think with volume growth coming back, the operating leverage benefit, both in terms of utilization levels going up and earnings probably inching higher in terms of realization, should start showing up on the balance sheet. A few mid-caps that we probably like, I think Subro's a play on the passenger vehicle segment. Elecon Engineering is something that we're probably liking. And from a turnaround basis, I think Action Construction Equipment is one stock that we're probably liking. We probably feel that EPC players specifically will gain substantially over the next few quarters with a lot of orders coming their way. And specifically in terms of margin and ROE expansion should probably be seen in balance sheets FY16 onwards. So I think Action Construction Equipment looks like a very interesting play to us.
Has pharma corrected enough, Mayuresh, for say something like a Lupin, down 15% now from the peak?
So clearly, I think wait for further corrections again on the pharma stocks. Valuation still looking a little bit on the higher side. And again, I think if one probably expects earnings to probably sustain, yes, they would probably sustain for the pharma pack as a whole. And again, I think the entire industry dynamics probably are favoring stable companies within the pharma pack. So I think in terms of earnings outlook, Sun Pharma, Dr. Reddy's, Lupin, Cipla will perform. But clearly, I think valuations is a little bit on the higher side for most of these companies. So I think I'll wait for declines before I start buying into these stocks.
Okay, any disclosures?
Anuj, all the stocks that we've discussed, I do not have any personal holdings, but clearly we would have discussed all these stocks with our clients.
All right, Mayuresh, thanks a lot for that. The